Settle down, settle down. Jumbo, konnichiwa. I guess I should say Ohio. All right, welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of helping you put together trade plans throughout this New York trading session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, hey, it's Tuesday. How did that happen? So, hey, we're going to do some technical analysis. That's great. We're going to go through the charts. We're going to see what's what. We have a shortened week, which means a lot of people want to hit targets early. That's great. Lots of things are happening. The best thing that looked most appealing last night in the day trading group were the yen pairs. And oh, cool. So we're going to take a look at those and see what's left. But honestly, I'll let you be the boss. I am a humble servant. I'm here to serve you. Let me know how I can help, what you want, what you need, and I will do my best to provide. Also, in the description below today's video, you will see a link to, my book, Strategic and Tactical Forex Trading, to free training videos on YouTube at youtube.com/FXBootcamp, to the FX Bootcamp community, which is $88 a year, including 65 hours of really fantastic, detailed, seriously helpful foreign exchange trading videos, macroeconomics, day trading, swing trading, monetary policy of central banks, trader psychology and taking control of your trading, and technical analysis, like holy smokes. So anyways, and then there's also a link to tradersway.com, which I believe to be an ethical, trustworthy, quality foreign exchange brokerage firm. Competitive spreads, awesome swaps, fast execution speed. Amazing. I mean, exactly what you're looking for. So, hey, go to tradersway.com. You don't have to click the link if you don't worry about, I'm not asking you to click a link, but you can click the link or not click the link. Go to tradersway.com, open up a demo account, and see if they can earn your loyalty and respect. And I think they will. They earned my loyalty and respect. Ooh, I don't know. What has it been? 7, 8 years? Okay. Been around. Tradersway.com. What's up? How you doing? Oh, I noticed, hang on. Let me update the ticker tape. It's got some stuff on there. I'll remove. Let me know how it can help. Can't find the ticker tape. Where is that? Oh, there it is. Let us. I'll remove the donation stuff. No, it won't let me. Weird. Everything's changed. Oh, I see how to do it now. Cool. Cool. Sorry about that. Let me get back. There you are. Good. What's up, RC Cola? You've been busy, huh? Guten Tag. All right. So anyways, here we is, and here we shall be. Aussie's still fairly weak. Pound neutral, Kiwi neutral, Euro strong. CAD recovering, Swissy strong. Okay, so that makes sense. Swissy and dollar makes sense. Okay, Swissy and dollar makes sense, although I would have preferred to see more dollar strength than that. Let me give it a couple more clicks. But it's recovering from the weakness. Okay, fine. And then the yen being weak here. I got to put this on an hourly here. Okay. Also makes sense. This up, if you recall last week, I said be careful for short-term yen strength, and that there should be a resumption of weakness. This strength had to do with scheduled YCC, scheduled, but not in the normal schedule, because what happened was there's normal yield curve control, and then they announce, let's say a modified schedule by adding in some new YCC. And that's what that was. And then it came and went and back down, and that's exactly what we had talked about last week. Cats for Live said, hey, can you cover the significance of quadruple witching Fridays, which was last Friday? And all that means is all options and all contracts expire on that day as we approach the end of the quarter. And in many cases, investors have to roll their positions over to the new month. So the front month expires and the back month becomes the front month, and people roll over. It's one of the reasons why the stock market's probably going up today. But nonetheless, what is the significance? I looked at it. I looked at the data. Now, I did this, 10 years ago, because I wanted to know what is the significance. And I never really found one. I thought there would have been. It sounded really cool when I first heard about it, 20 years ago. I'm like, wow. By the way, it was triple witching back then. But anyway, so I'm like, oh my God, really? That sounds awesome. And then I'm like, nah, I don't really see it. But that's what it is. And the significance is fairly benign. Okay, taking a look at what you guys are doing today. 50% said dollar, 40% said yen, and nobody's doing Bitcoin, which I find surprising. But the biggest deal yesterday, my day trading group was a babble session for me, but I had a lot going on. When there's 3 days to do fundamental analysis, which if I'm not trading, I'm doing fundies. So I had a data dump on the group yesterday, but mostly we looked at the dollar pairs, and I'm like, okay. Because right now it seems there's a counter trend inside of the longer term trend. And so I'm like, so maybe it'll do this or maybe it'll do that, but neither here nor there. And then I ended it with, look at these yens. This one will go up 200. This one will go up 250. This one will go up 300. And so half of you guys are really focused on the dollar. And I thought that one would be the play. And okay, good. Cool. All right, so lucky, I suppose. But this is sort of the leftover from the end of that particular YCC program. Okay. So I don't think this will be a long meeting unless you have lots of questions. But we can do the dollar pairs and just look at where we are in some of these. Not that one. Okay. And so what do we have here? I would call this mediocrity. And remember, I'm still I am a bear on this. And that's not a good entry yet. Now, you might argue double top, and then this will come down, and then it'll do this, and then it'll do that, and then it'll do this, and then we'll have a breakout. Yeah, I get it. I just don't want to play it yet. Because even if it does come down like it's doing, this is still probably, and that's what technical analysis is statistical probabilities, right? Okay. Okay. Well, if COT shows you equal, then it's not net long or net short. It's neutral. Sorry, just looking at the comment there. Kanana. So anyway, so like this is still pretty reasonable probability because we have this going on if you want to make it a cloud cover. Or if you want to do like here's another way of doing it. What do I want to do? I want to do a channel, do a standard deviation. Okay. And you can say, yeah, still bullish. Okay. That's all. And that's kind of how I presented it last night too, where I'm like, yeah, I want it to come down. It's just, no, not yet. I'll wait. I'll wait. Take a look at Aussie Dog. Okay. You can see what I had planned out. And there's two things. One, you're probably looking at the red line going, oh, he's thinking down. No, I'm thinking it could go down, but really, what am I saying here? Range. Okay, that's what I'm saying here. Range. So what if I'm a bear fundamentally, but technically we're in a range, what's likely to happen? At some point. Okay. The other thing I did last night is I discussed the entry, which is here. Okay. And then I moved my stop, which is here, and it's just simply plus 100 pips. Otherwise, it's neither here nor there as far as placement. I mean, it's fine. But obviously, moving it there is psychological. I mean, I don't know if the better stop is, 103 or 93, but whatever. So I got triple locked in. And so maybe this in the future at some point. So let it run, sit on it. Here's a look at, again, a similar analysis like I just did on whatever that first pair was. Now I've forgotten. But the same thing. So what we're looking at here is a linear aggression and a standard deviation study. Okay. Now, I find it tedious to calculate linear regression studies, and then you got to do standard deviation studies, and you're like, oh my God, it's so much work. So I thought, well, why don't I make something for you that would be great? So I did something called price action pivot points. Okay. And it's doing the same thing. Now this is a higher time frame. So a bear could say, okay, we're somewhere between the aggression and the deviation. So we're one standard deviation. Okay. Now, of course, you can change this and say, just go back less. Okay. And on the smaller time frame, it's bullish. So, the idea here, we look at multiple time frames, right? Maybe you don't like the 4 hour, maybe you prefer the 1 hour, but it helps you where you say like the short-term trend is here, but maybe the long-term trend is here because you're looking at both those studies, right? So you could do now insert indicator. Oh, no, channels. Let's do standard deviation from this top to our current price. And there you go, where you can see, in your studies, you're trying to remind yourself medium run and long run, or short run and long run, right? Where you're like, well, this is what we're doing now, but this is what we have been doing. So maybe somewhere in the price where we are now, something significant would happen. What would that be? Well, maybe the weekly swing. Okay. Now look at the pivots. M3 to M1, which is below us. Maybe that's the trade. Or maybe that's what's setting up now. You see what I mean? How I'm breaking it down into digestible pieces? And do you have to do it on the 4 hour? No, you could do it on the 1 hour. Okay. And so what does the 1 hour say? Well, what the pivot points were doing, remember I set it to 24. So it says over the last 24 hours, this pair is actually fairly neutral. Okay? Mostly neutral. But you could say, well, is that an opportunity? Well, if you thought this level was resistance because of monthly pivot points, because of weekly pivot points, or because of price, and then you find that the upward move seems to be losing steam because the pivots, sorry, not the pivot, in this case, a combination of linear and standard, right? A combination of standard deviation and regression, you're like, well, this is fairly neutral now. But if you thought the longer run was bearish, so now you're looking at this again, then you're like, well, maybe there's an opportunity where what is actually happening on the longer run is down, up, and then what's building up is the new down. Again, we don't know if it's true, but I'm going through the thought process. Okay. Piggy, 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 can't you see? Okay. Here's what I think. I think we're going to fart around and then head down. Okay. Two very strategically important days in the month. I'm going to mark July 4th. That's coming up. But even more important, I'm going to mark July 1st, which is Canada Day, which is Canada's independence from America. Look it up. It's true. It's in the Geneva Convention. All right. So anyway, so we got a period going into there. So how do you want to play that? How about a big up and then a big down? Any thoughts on that? Morning, Danny boy. Would you lend the UK money? Well, when you lend, one of the things you do is you look at your cost of borrowing, because you'd never lend your own money. That's why a plumber always hires a plumber when his pipes leak. Why would a plumber do that? Oh, he's much too expensive. So he hires somebody else. Anyways, so you borrow money, right? And then you want to lend it. That's basically what a bank does. They borrow money. They pay their customers / their suckers. Oh, gee whiz. Hang on. Sorry. All right. Anyways, oh yeah, what was I saying? Oh yeah. So then now you borrowed some money cheap. Banks pay their suckers. I mean, their customers a penny, and then they lend it out for 6%. So anyways, then when you lend money out, you want to do a risk analysis. So for example, Americans that were looking to buy houses in November no longer qualify for a mortgage. Did you know that? A very significant number, like something like 36%, I think, of people that qualified for a mortgage in November no longer qualify for a mortgage because the debt to income's changed. There's a big difference between a 4% mortgage and a 6% mortgage, and they can't afford it. They don't make enough money, or they have too much debt, or both. So if you were lending out a mortgage, you want to look at your debt to income ratio and all that kind of stuff, the likelihood the people you're lending money will continue making money, and that if they stop making money, they have enough assets that you can liquidate and get some of your money back or all of your money back. And so as foreign exchange traders, this is what we kind of want to do. This is what fundamentals are. Would you lend money to the UK? Well, we've been told that jobs are going to be cut, inflation is going to be high. And what are the sources of inflation? Energy and food. And is that going to be fixed anytime soon? And do they have any alternatives? Because when prices go high, very often people look for alternatives, substitutions, and all that kind of stuff. So what is the plan for the UK and how are they going to deal with it? So how about this? Have you even thought about pound dollar going to parity? Forget euro dollar. How about pound dollar? So you'd have to say, Wayne, I agree with that. Or Wayne, I totally I disagree with that. Cool. Then that's your rationale. Okay? Germany turning to coal. It would be interesting if there are new buyers of Australian coal because Australia has very clean coal. It'd be interesting if suddenly new demand shows up. So anyway, so you can see I've been doing other types of similar analyses when it comes to euro dollar. Maybe I want to short, but maybe I don't want to short now. Or if I do, it's a double top, and then you hold it and you see if you can breach through these and hold through the crack of support. Sure. That's called a trade plan. Good. Good. Kennedy says, hey, didn't China commit to developing 300 new coal mines? Great. Okay. In 5 years, that'll be relevant. Or 3 years. All right. In 1,000 days, that'll be good for Australian dollar. Okay. All right. Daniel says, what do you think about the balance of payments in terms of accuracy for China? It's one of these things where if you believe we're being lied to by China, that's fine. So then don't use the data. The way I look at it is, look, if I develop conspiracy theories, then it messes up my analysis for probably almost half the world, if not the entire world. So I'm like, look, I just trade the numbers they give me. Yeah, no, that's that, Daniel. I cannot quadruple the amount of analysis to say, well, this one lies this much and that one lies that much. But are there interesting political / conspiracy things going on in the world right now? Yeah, for sure. So I'm not going to gloss over it in the sense that I'm naive. I probably am naive, but I guess what I'm saying is I'm okay being naive. In the sense, I'm going to take the numbers, I'm going to crunch the numbers. Everybody probably lies roughly the same as, not as each other, but as their past lies. So anyways, I just gathered the data, I crunched the numbers, and make biases. But usually the decisions are so easy and backed up by deep data. But like, you look at Aussie dollar and you're just like, I'm a bear. Why? I'll give you 9 reasons why. So anyways, I can't dispute. I'm not going to dispute the numbers. It's just too complicated. Okay. Wait, does Tinder charge money? Really? Yeah. So anyways, yeah. Life's too complicated, man. It's too complicated already. Man, it's been a long day already. Let's go here. Let's go to tradersway.com. Tradersway.com. And empty web. And I want to go to MT5. Okay. And could be an interesting day. Okay. Could be an interesting day. We kind of bottomed out a little bit here. Okay. Now this goes back to Friday. Quadruple witching. Right? And now Monday and then Tuesday, maybe people are rolling over. If anyone wanted to own S&P 500 futures or buy stock or something, they maybe want to try to do it today because the contracts have expired and money might be rolling over from the old to the new. Also, we're getting close to the end of the quarter. Okay. Okay. End of the quarter. And so maybe a lot of people have gone to cash, and now they want to buy in before the end of the quarter because they don't want to report they're sitting on cash in July, maybe, because then the clients are like, well, why am I paying you money if you're in cash? So that what they do is they're in cash here, and then they buy something at the end of the quarter. Now they don't have cash. Okay. So there's some of that thought. Mahai says, hey, Wayne, I remember when you said Ian 22. Wait, restate that. Ian 22 is a top. I don't know what you're talking about. EN 22 is a top, but it keeps on. January. Okay, Jan 22 is a top. All right, restate it. Yes. What I said, and I said this in October, that January would be down, and then somewhere near the end of the first quarter, there would be a false rally, and then as we approached July 1st, that the stock market would do something like this, long and slow and flat decline, and then November, December will be a sharp up. And then I already have the first quarter and maybe even the first half of next year modeled out. But that's what I said in October. I'm sure October, but certainly November and December of last year, that January, Feb, March, April, May, June, July, August, September, October. This would be about November, December. So anyways, something like that. Okay. In fact, I did a special webinar on it, and I covered it over the course of an hour. Okay. And that's still what I'm modeling. Mr. Kennedy says, are you predicting November, December market going up because of seasonality? Oh, well, the answer is sorta. Okay. But I'm looking at 1, 2, 3, 4, 5, 6, 7, 8. If you want to call this, it's not a season, but a cycle. Okay. I'm looking at an 8-year cycle. So season is 1 year. I'm looking at an 8-year cycle, and we're here. And that tells me August, Sep, and October, which are normally, let's say, up, down, up, will be not up, not up, not up. But November and December will be up. And so this would probably be down, sideways, I think up and down, because people are going to do what they think is normal, but they're not as smart as our analysis. So they're looking at this year being normal. They're not so whoever trades long here, and I'm going to go with it, but I don't expect it to work. But those people are looking at seasonality, and I'm looking at seasonality inside of an 8-year cycle. Is it a business cycle? No. But it's part of the business cycle. It may create the business cycle, but anyways. So all I'm trying to say here is maybe a big up day in the stock market, and don't be shocked if it's like a big morning and a terrible afternoon or something. Is it the CAPM model? No. Again, what a great model though, right? The expected return of the stock is equal to, I guess it's parentheses, right? The risk-free rate of return minus the beta of the stock times, what is it? The expected return of the market minus the risk-free rate of return. Okay. What a pretty little. It's pretty. That's CAPM. No. But you bring it up, Richard. CAPM, as I've explained it over the last couple of weeks, would not be responsible for a November, December rally Okay. Because doing this CAP-M model, CAP-M, okay. This model, this equation, Jeffrey, absolutely. I think if you don't know this stuff, you don't know how to trade. Now, a lot of people are arguing, Wayne, everything's in the price. Yes, I agree. Technical analysis is awesome, and you could just track that. But I'm just talking on a different level. Not that I'm pushing technical only, but I believe this stuff's important if I'm going to talk about what's going to happen next year. And then so Richard says, hey, so is it CAP-M? Well, we're talking about now, the topic is November, December rally. What makes me think that? Not CAP-M, because CAP-M tells me in 2023, based on what we know now, the stock market's going to come back down. And I already have this all modeled out. So I can say, oh, yeah, there's going to be a big rally in November, December. Yeah, probably, based on the probabilities. And then I know exactly what I'm going to do next. Cool. It's great. Now, am I right? I don't know if I'm right, but at least I know what I intend to do. I just don't know if I'll get the opportunity or if I'll have the strength and courage. Okay. Okay. So anyways, stock market. Okay. La, 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 la. So could be a good day. Okay. Okay. Cool. And, well, some of these are going to have to wait for second chances now. The danger has picked up, of course. Because now you got to wait for a pullback way back in there. And I don't know. Oh, look at that. My mouse just died. Huh. Is it? Yeah, now it's going to work. Okay. So last night we had this kind of planned out. Problem is now we're up here, and if it collapses, it could do this, right? Because now you're not just near a top, but you're on the top. Now you might say, well, Wayne, the actual target is here. Yeah, but so what? Monday was cool. Tuesday was all right. Now, and well, by Tuesday I mean last night. So the kind of the best trade was the what we call out of position. Okay, OOP. This is in the training course, by the way. To do an out of position trade, you have to be on the 4 hour. And you look at this and you're like, oh my God, nice OOP. Yeah. So now, I don't know, guys. Now if you're going to trade this on a smaller time frame, you just be careful, because you have more risk on top of you than you did earlier. So on a 15-minute chart, okay, you're basically doing stuff like this. The only problem is now, okay, now this is more likely than ever. over the last 24 hours so on a 15-minute chart. So I guess what you're going to do is you're going to, buy a dip and hope it keeps going up. That's the part I don't like. Because you might have a logical entry, price action, but you're also right on top of a logical exit. And now I think what's going to happen is some bulls will buy, some bears will sell, some bulls will exit, some bears will enter, and whatever, dude. Same thing, okay? 8 hours ago was a hell of a lot different than now. So 8 hours ago we were here talking about a day trade, and now we're here, and now what? Well, your best scenario is like that. That's tomorrow's trade. But also if you're kicking off the top here, but I would look at this and say what you really want to try for is your R3. Okay. Your R3 is up here, but this is also saying like, hey man, if it's a thin trading week, right? I don't know. Because remember, this is an exit. That's what it's pink, but it's just light red. And what that means is bears should exit. Do you think bears will exit on a double top at a price they're supposed to exit anyways? So I don't know. It's just, oh my God, if you're going to be trading this, you got to be careful. Also, watch the Bank of Japan. Another YCC operation will give yen strength right at the top, man. Okay. Okay, like, just if they announce it, all of a sudden, yen gets strong, and and when a yen gets strong, yen pairs come down. Now think of it like if the Bank of Japan does some operations over the next day or two that naturally would strengthen the pound. This is where, naturally strengthen the yen. The pound yen wants to come down anyways on profit taking. And so adding the Bank of Japan on top of that would just, it wouldn't hurt. Chris says, hey man, I took that trade yesterday and got out this morning exactly as you described. Waiting for the retracement. Cool. Awesome. So anyways, yeah, a little dangerous now that it's sort of already occurred. Taking a look at the stabilization of energy. Okay. Try to mark it up now and game plan it. What do you think of this? It was your swing trading videos that helped me the most. Awesome. Remember, you should swing trade first. So you plan your week. Okay? And then you day trade from that. So I'm not going to change this chart, but let me use this chart. So going back to Monday, let's say this was a significant pivot point. Let's say it was an M2 pivot point, an MM2, a weekly M2. Okay? So you're like, okay, well, your trade plan then as a bull is this. For the week, M2 to M4. Okay? Okay, let's just say that's true. I don't know if that's true. Let's just say that's true. So you started out, and that's you psychologically on Monday. You're like, I want to start buying dips, as low as 109, but you believe this is going back to 120. You got it? That's called a strategy. And then from there, once you got all that laid out, Chris, then you come back in and you day trade and you say, okay, where am I supposed to be buying on day one? And then you, let's say, look at daily pivot points and you look at moving averages and you look at price action, and you look at various things and you're like, okay, well, maybe You're going to try one dip at 109. Or maybe you don't even trade on Monday because it's neutral and you're waiting for a breakout. Cool. Okay, now you go to, so you don't trade that day, but you go to the next issue now, and you're like, okay, it went up, and now you got a higher high. So now you have a new day trade opportunity, higher high in Asia. And you're like, okay, now what? All right, I want to buy a higher low. Where? Well, the first thing you want to do is price action. So that's why I have this. Or maybe use Fibonacci. Okay? Maybe use day trade, daily pivots. And let's say there's a daily pivot in here. Because it's kind of doing the same thing as everybody else. Maybe use a linear regression. Great. It's all doing the same thing. So today's day trade would be, buy it here around 111, maybe 110 if you can catch a psych. And that's it. So you want to buy a higher low somewhere around there. And now you're done. Now, tomorrow, let's say we're up here, higher high. What do you want to do tomorrow? Well, remember, your swing strategy is already set, and maybe you're in that and you're going to hold it all week. And then maybe you got today's trade, and if we're up here, today's trade's profitable. So move all your stops to break even. And so what's tomorrow's trade plan? All right, well, we got a higher high. You want to look at a higher low. So you want to look at a rule reversal. Maybe you want to do a Fibonacci. You look at maybe tomorrow's pivot, high, low, closed, about, so it's probably here. And so on and so forth. Maybe you want to use the moving averages. All great, all great. So now, if today works and you get a higher high, then the next day, so we're already on tomorrow, you probably want to buy around 113, 112 and a half. And now you're working your way up. We call these steps. You're stepping up. Okay? These could be all day trades where you're in and out, or you add. But nonetheless, what is your basic weekly strategy? Your strategy is based on oil's going to go back to 120-ish. Okay? Monday, Tuesday, Wednesday, Thursday, and so on and so forth. Okay? Day trades inside of swings. Okay? Richard says, that's why I think Canada does so well when oil prices go up. Or maybe they just sell oil at high prices. It has nothing to do with the Bank of Canada. Dollar cost averaging. No, that's not dollar cost averaging. Okay? But anyways, you're building a position. Okay? A portfolio. Right? You're constructing a portfolio. Anyways. Oil. Sweet. So already we're back to 112. Could be interesting. Could be a rabbit. Could be. By the way, today is the first day of summer. Or I guess the first day of winter, if you're on the other side of the planet. Okay. Gold. Okay, one of the things I've been describing, and we spent a reasonable amount of time yesterday with gold in the day trading group, and I discussed my thoughts on when gold is going to rally. Okay? Maybe gold comes down until it rallies. I don't know. Maybe it stays sideways. Hey, gold's flat when the stock market's down 20%, so maybe gold has been a great hedge. But in some time in the future, could gold go to 3,000? Yeah. If you want to know when, why don't you just join FX Bootcamp? Solstice. You know, it always makes me think. I used to live in San Francisco, and there are a lot of witches in San Francisco. And there are always some pretty awesome parties in San Francisco. Right? If you like hanging out with witches. Witches know how to party. And the cool thing is, they're hippie witches, which means they're nice witches, I think. All right. One of these days, man, it is a busy day. Lots going on. Did I miss anything? I didn't really say anything about gold, but you know, what is there to say? I guess I didn't do Bitcoin. You know, scalping, right? Are you scalping it or what? How do you play in this? Okay. Yeah. Well, the thing is here, like, I know exactly what you're saying. I don't agree or disagree. Right? Sure. Why not 3,000? Okay. But anyways, as a trader, you could just scalp the heck out of the price action and just say, people are definitely playing the 20K. Okay. The 20K is the line in the sand that people are playing. This is just a market thing now. Range trade it 32 to 17. Yeah. That seems reasonable to me as well. So if you're a scalper now, and look, this goes back in time. We already marked all these prices. But if you're going to try to scalp it, right, the way I would look at it if I were me, as long as we're above this, I can buy a dip. Okay. And you just scalp it. Maybe today you're like, what do you want to do today? Maybe I scalp Bitcoin, maybe I scalp oil, and that's that. You know what I'm talking about? You're like, it's one of those things, like, you don't have to love it. Right? You don't have to love it. You just have to trade it. Okay. Play the game. Right? Oh, lonely day, run to the river, run to the sea. Anywho, I don't know. It's 10 o'clock in the morning. I'm exhausted. I've been up for hours and hours and hours and hours and hours. But life is good. Could be worse. It's going to get worse. So we need to stick together. I think the economy is going to be at best benign from here. And I think worse off next year. So we need to band together as a community to make sure that we have our finger on the pulse of everything. When people ask me about being a Forex trader, I'm like, well, you have to know everything. and accurately predict the future every single day. But besides that, it's easy. So how are you going to know everything? The import-export data out of Australia. Are they exporting iron ore and coal? What about Shenzhen being shut down with COVID? Is that going to be a problem? Well, what about the change in policy at the Reserve Bank, of the Swiss National Bank? And what is the yield curve control? And it invented and being used and implemented by the Bank of Japan, but the ECB is going to start doing it. Well, how's that going to affect the euro over the next couple of years? And will the United States have some form in the next couple of years? There's known unknowns, and then there's the unknown unknowns. It's going to get interesting and complicated, I think. And I'm worried that the normal stuff doesn't work, where when in 24 months from now, the Fed starts cutting interest rates. Normally, the dollar would get strong. What if it gets weak? And what if it's the opposite? Like, wow. Well, there's a lot of things that need to happen between now and then. It's going to be a very interesting, tricky ride. We got to watch bond yields. And by the way, in the day trading group yesterday, I talked about 4% bond yields and how that could change the course of action of what's happening. So, it's going to be a very interesting couple of years. I mean, like cats living with dogs kind of stuff. Okay? So, it'll be, I think, utmost important that we learn from each other, we listen to each other, we collaborate with each other. We're from, our community here is from all over the world. We have boots on the ground everywhere. We're like Fight Club, but for Forex. So we got to utilize and leverage the community as much as possible. I think a lot of these things can be planned, but I think also things can change fairly quickly. So we got to have our finger on the pulse, and we got to leverage the value of our community as much as possible over the next few years. So thank you for being part of the community. Okay. So anyways, I will leave you to it. Peace on earth. May the pips be with you. May your profits be above average. Please join FX Bootcamp, $88 a year. And visit tradersway.com. Give them an opportunity to earn your loyalty and respect. And I'll see you for the pre-Asian session if you're in my day trading group. Day traders also work with Ryan at the pre-European Open. And everybody else, I'll see you in the AM 24 hours, well, 23 hours from now. Have a good one. Out.